Guys for joining us today for this webinar, The Power of Capital. I'd like to introduce to you all Miss Veronica. I'm sorry, can you guys hear me? Just want to make sure you can hear me. Awesome. Okay. Veronica Reyes is the Vice President and Deputy Director of National Market Operations at TrueFund Financial Services. She began her career in banking, where she developed a strong foundation in finance before transitioning into community development lending. With more than 15 years of experience, Veronica bridges traditional finance with mission-driven strategies to help entrepreneurs access capital, strengthen their businesses, and create lasting impact in their communities. At TrueFund, she oversees multi-state market operations across Louisiana, Texas, Georgia, Alabama, New York, and New Jersey. In this capacity, she directs market managers, advances lending and technical assistance programs, and ensures that TrueFund's local market efforts are aligned with the national priorities. Her leadership has been central to expanding programs that increase credit access, build financial capacity, and strengthen small business ecosystems across diverse markets. Bilingual in English and Spanish, Veronica is recognized for her collaborative approach and deep commitment to inclusive economic growth. She works closely with philanthropic, corporate, and civic partners to design initiatives that open doors for entrepreneurs to grow and thrive. By combining her banking expertise with her passion for community development, she has helped TrueFund deliver innovative solutions that meet entrepreneurs where they are and position them for long-term success. So without further ado, I'd like to introduce you all to Ms. Veronica Reyes. Thank you.
Well, thank you so much. That was a mouthful. At the heart of what I do is just a servant leader to small business owners that I serve across markets. And I have with me my team, Ms. Tatiana Stevenson and Jepta Stewart. So if you guys can introduce yourselves and what you do here, they'll be presenting alongside with me today.
Tatiana?
Sure. So, hi, everyone. I'm Tatiana Stevenson. I'm the Assistant Vice President and Community Engagement Manager for our New York, New Jersey markets here at TrueFund. And I do this in tandem with Veronica under her leadership to make sure that I'm going out in the community and engaging small businesses as well as providing technical assistance to all those that require. We work as a collective in a group filled with others that work our other markets like our Georgia, Alabama, and Louisiana. And I'm happy to be here, Jepta.
Yes, good morning. I just want to be really grateful for the opportunity to speak with the New York, New Jersey Minority Supplier Diversity Council and members who are actively working to grow their businesses and sustain and grow their businesses. My name is Jepta Stewart. I am currently the Assistant Vice President for lending. So I'm a loan officer. I've been here about 4 years and looking forward to speaking with you about some of our products today and hope to hear from some of you soon. Thank you.
All right. Well, thank you, team. And thank you to the New York, New Jersey MSDC for this opportunity to present to you guys. I'm going to start my screen shortly. So give me a second and then we'll get started. We have a lot to cover, but this is really an interactive presentation. I want you to stop and ask any questions that you have. Put them in this chat. We'll be more than happy to get to those questions as well. So give me a second. Let me share my screen. All right, so if that's not the right screen, give me a second. All right, can we see my screen?
Yes.
All right, we're gonna start the slideshow. All right, well, thank you so much. Thank you guys for attending the Power of Capital. This partnership is really the power of partnership. The partnership between True Fund and the New York, New Jersey MSDC is an exciting one. We're coming together as a shared commitment to strengthen our business owners, to expand access to opportunities, and open real pathways to growth. Growth just doesn't happen through access to capital. It happens with the knowledge that you need to help your business grow and get where you want to be. This partnership brings together capital, capacity, and community so more entrepreneurs can build, scale, and compete with confidence. We look forward to working side by side to support business owners across the region and to create impact that lasts. The power of capital is just a piece of the larger puzzle. A lot of the information that I'm going to share today is information that you can use in your journey as a small business owner. And we're going to be talking about the importance of capital, and understanding that your business is always accessing capital. The reality is that most business owners are going to be accessing capital on a day-to-day basis by the revenue that you're earning in your business. But the reality is it's really important that as you're accessing capital, it's really understanding how and when that capital can support your business. So here's just a couple notes that I have regarding financing and supporting your business, and stats that can be scary, but our goal here is to support you from just becoming a statistic. Lack of access to monetary capital is just one barrier that most business owners face. The other is lack of social capital. So capital to access and social capital are going to be big barriers that most business owners face. Having powerful networks and these powerful partnerships really help business owners get to where they want to get to. Currently, there's 2.6 million businesses that are owned in this business, where 8 out of 10 fail within the first 18 months due to lack of resources and funds. Insufficient financing is the second most common reason for business failure. And most business owners we know are relying solely on their personal funds and credit for financing, while 72% of business owners are getting denied. These are staggering facts, but we're here to really support and help create a way for you to overcome some of the barriers that are existing today. We know that the power of capital can help with operational stability, investment and innovation, and scaling opportunities. So we can't understate or overstate the power of capital, from funding day-to-day operations to fueling innovation and expansion. Capital is the lifeblood of growth. And by understanding the various sources of capital, creating a solid business plan and making strategic investments, managing your cash flow effectively, you can unlock the full potential and navigate the path to success. Remember that it's not just about having capital, but it's leveraging wisely to create lasting impact. Like I stated at the beginning, as a business owner, you're always accessing capital, but most of it comes from your day-to-day revenue. So really leveraging the different types of capital are really going to help you create that lasting impact and effect. This is a great quote that I love to use because Grant Cardone is a world-renowned entrepreneur, author, speaker, investor, and coach. He owns and operates 7 privately held companies, a private equity real estate firm, and he has a multi-family portfolio of assets. And when I think about debt capital, I'm very debt adverse, okay? But when I think about how the wealthy have learned the power of leverage is a tool and a lesson that we need to take. How I always look at it simple. How is my money that I'm going to borrow going to help me make more money? So rich people use debt to leverage investments and grow cash flows, while poor people use debt to buy things that make other people rich or rich people richer. I love this quote because it even challenges me to say, how am I going to, if I'm going to borrow money, how can I really use it to make more money? If I'm really just borrowing money to make other people richer, then I don't need to be borrowing this money. So it's really the psychology of money, of debt is a tool to build a greater certainty in our lives. It really shouldn't be something that is used to make other people richer. So as you're thinking about borrowing for your business, really thinking through these questions. So I have some questions that I have put in place to ask yourself, does your business need to borrow? Again, your business is always accessing capital. So the next question is, do I need to borrow for my business? So when assessing your business needs and financial viability, asking yourself these questions are going to be an important part to understand how accessing capital can propel your business to level you up and not an anchor to hold you back. So every business should consider whether borrowing is a source of capital that you need to do. And the decision to borrow is going to be a strategic one and an important approach with careful thought and consideration. So I want you to take a picture of this screen, hold it, keep it. By asking yourself these questions, they're really going to help you analyze your business needs and financial situation to determine if it aligns with your long-term success. So questions like, what is a specific purpose of borrowing? Defining what the use of funds is going to be. As lenders, sometimes the biggest red flag we come across is, I need to borrow money. How much do I qualify for? That is a big, big flag, a red flag for any lender. So knowing what you're clearly going to use the funds for is the first step. Defining, how is this money going to help me make more money? Am I borrowing the money for marketing? What's my return on investment in marketing? Am I borrowing money to purchase a piece of equipment? Well, this equipment is going to allow me to generate X times the amount that I'm generating now. So when you clearly have a defined use of funds, it really gives that lender that confidence to know that you know what you're going to be using the funds for. Is borrowing the best solution for your needs? Are there alternative methods to raising capital? We've all seen Shark Tank, where business owners will sell a piece of equity of their business, which is a way, to raise capital as well. So can you seek an investor? Or like I said, your business is always accessing capital. Are you reinvesting your profits? Or are you using your profits to fund your personal life? So knowing these things are going to be really important to understand, is borrowing the best solution? Does it fit with your growth plan? Does it lead to sustainable growth? Is it realistic for my business to even borrow? Are we projecting how much does it impact your cash flow? Are you going to be able to meet the ability of repay? So this kind of goes back to the use of funds, because if the use of funds is just to sustain where your business is today, but there's no real growth plan, then when you borrow money that you can't realistically afford, it becomes an anchor. But it could be a propeller too, right? Because if you're borrowing that money to make more money, then you know how it's going to impact your cash flow, and you're going to know how it can help you meet repayment obligations. So modeling those different scenarios to understand how borrowing will affect your monthly and yearly cash flow, it's really important to understand. And how will borrowing affect my long-term financial health? So yes, borrowing money could be a great tool for you, but does this impact the ability to invest and grow in the future? So, these questions are just really great way for you to assess the financial viability of your business and really assess, does your business need to borrow? Or maybe do you need to just grow your revenues? And so oftentimes when we have people come to TrueFund, one of the questions that we sit down and ask is what that use of funds is. And oftentimes we find that borrowing is not the best position to put the client. They just need to grow their revenues by changing their business model. So I'll give you an example where we were working with a small business owner who does wigs for a living. And yes, could she borrow? Absolutely, but it wasn't going to help her, lead to sustainable growth or even long-term growth. And so what we found was that she was severely undercutting her pricing in comparison to what her business could possibly be doing. And how did we know that? By giving her a tool that really shows her what the landscape of her business really makes. And so she was able to change raise her pricing. That's one example. The other example that I have is a small business owner that we helped, mechanic shop that was charging $75 labor rate when his industry report showed that he should be charging at least 135 to 185 an hour. And so it's not borrowing more money. It was for him simply looking at what does his industry report say and how much his labor. And by shifting these little things, they're able to grow revenue, not necessarily borrow for a need that he thought he needed to borrow for. So when we're looking at positioning your business for accessing capital in a traditional source like financing or debt capital, I wanted to show you guys this and kind of put you in a position of understanding the importance of personal credit and business credit if you're considering debt capital. So it's not uncommon for lenders to require personal credit for you to secure a small business loan. In fact, most business owners are considered small business owners, meaning that you would need a personal guarantee to guarantee the loan. And so only very, very large, sophisticated businesses may not rely on your owner's personal credit, or personal guarantee. And so we see that as the business gets very large and sophisticated, it's going to rely more on business credit, but technically, half of the time, the importance of personal credit is going to be the one that's going to impact your ability to secure a small business loan. Now, what credit score is needed from lender to lender really just depends on the lender. And so there's a big range between how does that personal credit impact your ability to secure financing. And so your goal is to really understand like what is my credit score today? What is my credit report saying? Typically, I have a great little mentor here where I live who likes to look at credit, and he divides the report into 3 things. He says, is it ash? Is it smoke? Or is it on fire? And what does that mean? It means that depending on your credit score, there could be a lot going on in the actual report. Is it old stuff that's reporting and he looks at it as ash and says, this is old stuff. This was a period of the person's time, period, it's old. Or is it on smoke, meaning that there was a fire happening, you put it out, you handled it, now you're ready to move forward? Or is the report on fire, that credit score hasn't been impacted, but we see a bunch of late pays. Things are not good right now. Things are on fire. That business owner needs to handle what's happening on there. But just know that your credit is going to impact the ability to secure funding. This is another kind of thing that I like to point out, which is the difference between cost and effort. And so, the effort may be placed in helping your credit score go up, right? And so as your credit score goes up, you may know that you have more options, So what I like this kind of infographic is to kind of show you the different various options of financing that is available to you. So can you get financing? Oftentimes, yes, but it may come at a cost or effort to you. So we can see here that there's merchant cash advances that are happening. There are cash flow loans. We see a lot of borrowers that get loans through QuickBooks. They get loans through their their merchant payment services, and that is a great way to get fast money, but it comes at a cost to you. So it's very little effort, but higher cost to you. You're going to see it in interest rates. You're going to see it in fees. I've seen it where, borrowers are having to pay a large dollar amount per week on that loan. And then you'll see things like receivable financing where, there's moderate cost and possibly lower effort. And then there's all kind of things. So when you're coming through more of a non-traditional source, there may be little cost, maybe more effort. As you move over to banks, you'll see that there's little cost, but more effort. So what I want your takeaway to take away from here is that fast money isn't always good money. And it takes effort to obtain a small business loan. So effort, even if you're doing crowdfunding or equity crowdfund, if you go to a thing like Shark Tank or something like that, where you're doing equity and looking for an investor, it's going to take a lot of effort from your ability to make sure that you're selling your business and positioning your business in the best way, but it's going to come at a very little cost to you. So really thinking through that when you're looking for financing is important. But there are different types of capital sources for your business. So thinking through, what if I'm going to put in the effort and I'm going to understand the cost, understanding there are different capital sources. So we have bank financing, which does a lot of great things. They have lines of credits, they have working loans, they have different various options for you. There's SBA financing. I love to say that SBA only makes a strong loan stronger. TrueFund is a certified SBA lender, but there are different lenders out there that are SBA certified lending. Regardless of it, it protects the business service organization, the bank or a finance company like TrueFund, make a strong loan stronger. So those are just options out there. You have community-based organizations such as TrueFund and other CDFIs out there that are available and have the ability to help get creative and flexible with their financing that's outside the scope of traditional banking. There's self-funded options, maybe that you are using your own funding, friends and family, factoring, trade credits, peer-to-peer, buy to own, those kind of things. So, those oftentimes are resources that are available to you, where your company may have to give up some equity position, or maybe, you just have really great family and friends to do so. You have venture capitalists, angel capitalists, capital that's available. Again, these are just other ways that you can seek funding, but you're exchanging it for an ownership stake or equity you're giving up. So sometimes that's a very inexpensive way on the front end to borrow money, but long term can be very expensive, because if you have a very successful company, then you're giving up, a good amount of equity, or, all those kind of things. There's crowdfunding and microfinancing and fintech, but these are different capital sources. So you saw the chart, but this kind of goes into it a little bit deeper into those different capital sources. Moving forward today, when you're kind of faced with all these options and you're thinking through what capital source is right for you, that is a great question, because it really comes down to working with business service organizations such as the New York, New Jersey MSDC, where part of their job is connecting with great capital partners out there, that they'll be able to connect you to the right capital source for you. Sometimes it may be starting with your bank and seeing, like, what does my bank options have? And hopefully they're really good at networking and knowing, like, who's out there in case the bank's not the right fit. But ultimately, finding someone you like and trust is really important. Asking questions. And at the end, I'm going to give you some questions you should be asking. but asking questions and expecting a timely, honest answer that you understand. And if you don't understand, stopping them to say, hey, talk to me like a normal person and not like a banker, right? Being open to feedback and options is key, and understanding what the needs of your business are to select the right capital source and structure that's going to help meet your immediate and long-term goals. But today, I want you to learn a little bit more about TrueFund and about a non-traditional lender, which is we're a nonprofit certified CDFI. And so I'm going to turn this over to my partner in crime here, Miss Tatiana, who's going to go over who is TrueFund and go over a little bit about what we do so you have a good understanding about a capital source through a non-traditional lender. All right, Miss Tatiana.
So hi everyone. So who is TrueFund? In a nutshell, we are a national nonprofit community development financial institution. So a CDFI, as Veronica mentioned, that provides capital and technical assistance to small businesses and nonprofit organizations. At TrueFund, our mission is simple, but it is powerful. We're here to empower historically disadvantaged individuals and communities. Our goal is to help build thriving, resilient small businesses that can in turn strengthen the neighborhoods that they are a part of. We focus on closing that racial and economic gap and really making sure everyone has a fair shot at opportunity, regardless of their background or zip code. That's the heart of what we do. It's not just about lending money, it's about creating access and building equity to support inclusive growth. As mentioned previously, TrueFund operates across several states, which includes New York, New Jersey, Georgia, Alabama, Louisiana, and Texas. Now, each of these markets is unique, but what they all have in common is that they're places where access to capital can be the biggest barrier to growth. And that's where we come in. We focus on those communities where our resources can make the most meaningful impact, helping small businesses grow, creating jobs, and keeping local economies strong. When it comes down to it, access to capital is the foundation of what we do. We understand that running or growing a business takes funding, and sometimes traditional lenders just don't see the full picture. So we offer a range of loan products designed specifically for small business owners and entrepreneurs. We have small business loans, which are flexible and designed to help you grow and sustain operations. We also have contract mobilization loans. These are great for businesses that have been awarded contracts and need that upfront working capital to get started and deliver on their commitments. And then we have real estate acquisition loans for those looking to invest in properties or expand their commercial real estate development. Each of these options is meant to meet you where you are and help you with the next steps towards business goals, I'm sorry. And now at TrueFund, we know that financing alone isn't always enough. So that's where we go above and beyond just loans. We also provide business advisory services, things like guidance on financial planning, marketing strategies, and operational improvements. So basically, we help you not just get funding, but use it effectively. On top of that, we manage a few really impactful programs that's there are Impact Developers Fund, which empowers minority and women-owned real estate developers to take part of community development projects. We also have the New Markets Tax Credit Program, which helps bring private investments into underserved areas by creating jobs and improving infrastructure. And then we have our Community Climate Fund, which focused on investing in renewable energy, energy efficiency, and climate resilience projects, which help communities grow in a sustainable way. So we're not just helping businesses, we're investing in people, neighborhoods, and long-term community health. You can always learn more about us at our website, and my colleague Jepta will also go in depth in a moment on these specific products and programs. But our website is www.truefund.org. So you may be wondering, why choose TrueFund? Well, for us, it really comes down to three things: community, support, and impact. First, we're deeply community centered. Everything we do starts with understanding the real needs of the entrepreneur who has historically faced barriers. And then second, we offer comprehensive support. And by that, I mean, we don't just hand out loans and walk away. We provide the resources and the guidance and the partnerships to help our clients thrive. And the third, we have a proven track record. We've helped countless businesses across multiple states expand, create jobs, and then strengthen their local economies. So when you choose TrueFund, you're choosing a partner that believes in your potential and doesn't just walk away, but walks with you every step of the way. We work with small businesses, contractors, developers, nonprofits that are ready to grow, but might not fit the mold of traditional bank financing. Um, we serve them with we serve them because, quite frankly, we believe that the talent and good ideas are everywhere, but opportunity isn't. So our job is to close that gap, to make sure that entrepreneurs, regardless of background, have access to capital and the support that they need. Because when small businesses grow, I can't stress it enough, they hire locally, they reinvest in their neighborhoods, and that's how we build a stronger, more equitable community. So that's why we do what we do and why you should choose us. So to wrap things up, I just want to leave you with this. TrueFund isn't just a lender. We're a mission-driven partner committed to helping businesses grow and communities thrive. Every loan, every advisory session, every project we take on, it's about empowering people to create lasting change. I thank you all for your time and attention. It's been a pleasure to share this. And now I'm going to pass it over to Jepta, who's going to take us through our specific loan products and walk you through how the loan process works. Jepta, the floor is yours.
Yes, thank you, Tatiana, for that really illuminating discussion on TrueFund and who we are, why we exist, and the impacts that we're making across the United States in our markets, and certainly working with our partners, like the New York, New Jersey Minority Supplier Diversity Council. I really want to thank you for sharing that with everyone here. I want to also make a statement. You know, our TrueFund's motto, and this will make sense as I describe some of our products, and certainly with some of what you've heard already from Veronica and Tatiana. Our motto is more than a loan, an opportunity. And that really, since the time I've been here, that's really resonated with me through providing access to capital with the loan products that we provide. So I'll jump right into it. And as I describe some of the products, I think you really get to see what we're talking about as far as more than a loan, an opportunity. So we do offer small business loans. Those loans are usually within $50,000 to $350,000. These loans can be used, again, to empower small business who may be in need of increasing their inventory. There may be some leasehold improvements required at the facility or the business where they're operating. There may be a need for marketing, really trying to get the word out and expand upon new customers, new business to come in and generate more revenue. We are very focused on supporting small businesses with these loans. One of the ways that we assist is, our minimum credit requirement. Credit seems to always be an issue for small businesses. So if you're not at a 680, 700 plus credit score, traditional lenders will typically show you the door, right? Here at True Fund, across all of our loans, with the exception of the real estate acquisition program, our minimum credit score is 600. And there are some instances where we'll go below that if there are, some mitigating factors, or special circumstances. But that's one way in which we assist our small business owners with access to capital. Also, with the small business loan, you might be asking, what is the term? What is the interest rate? These seem to be always on the top of a small business mind. But we are usually between 9 and 11% on our small business loans for a term of 5 years. So the expectation is that you would pay principal and interest across 60 months in order to repay that loan. The way in which we do look at a small business is we look for 2 years of operations. So, and that is very important because our underwriting typically relies on the revenue of the business and their profit. So that's something to keep in mind there with our small business loans. For the True Access contractor mobilization loans, which is really my area of focus, we look to support small businesses who've won contracts from the city, state, or government. And what we can provide is up to 30% of the contract value on the loan with a maximum amount of $1 million. These funds are really used to help a small business begin fulfilling on the project. Oftentimes, a small business will win an award. Everyone's excited that we got to that point on the journey. And then now you're having sleepless nights as to how you're going to begin meeting your payroll, purchasing materials. Maybe you need equipment in order to fulfill on this project. And of course, the contractor may tell you, oh, it's a 30-day turnaround from your invoice in order to receive compensation for services rendered. Well, that we know that is not always the case. And oftentimes there are delays in payment. So one of the things that the contractor mobilization loan is able to provide is to provide that comfort and sort of a gap to fill the gap, if you will, between the time that you've invoiced and the time that you're actually paid. Again, with the contractor finance loans, we do have a couple of different scenarios. If you're working with a New York City agency, such as New York City Housing Authority, the New York Police Department, Department of Education, anyone at all like that, we're able to offer these loans at 3% per year. And so some folks try to think of this as factoring, but it's really not. For those of you who may be familiar with factoring, it's really not. And I say that because, first of all, the interest rate is capped at 3% for the year. And oftentimes, while we'll provide a 1-year term, we are looking for that business to fulfill their project needs, to repay the loan within a period of 4 to 6 months, and then have the business revenues generated support the project thereafter. So in effect, you're really not even paying a full 3% on the funds. Across all of our loans, we have no prepayment penalty. We do not, expect a full year of interest if you've obviously repaid the loan within a shorter time window. So those are one of the things to keep in mind there. We look to, so that's the New York City Contract Finance Loan Fund. That's how we're able to offer the 3%, because they do help by subsidizing the rate. New York City has made quite the effort in supporting our small businesses in need. On the other side, we do have contractor mobilization for state and federal contracts. In those cases, again, we can lend up to 30% of contract value with a maximum of loan amount of $1 million. However, the interest rate would be at between 8 and 9%. And again, that's how we can support small businesses that win those contracts. One of the ways in which that we secure ourselves is there is a requirement for an assignment of proceeds. So this is where it is akin to factoring, in that the agency is directed through this agreement to direct the funds to True Fund first for each invoice payment. True Fund would then hold a percentage of those funds, and then remit the balance to you within a 2 to 3 day time frame. This way, it's fully transparent. We know that there's performance on the job or the project. The agency or the prime contractor, in some cases, is also made aware of this, and we're able to now get the loan repaid in a timely manner. So that's contractor finance for the most part. And then we also have our real estate acquisition program, affectionately known as the RAP, where we're able to provide funding for any small business who is seeking an opportunity to purchase the building that they are operating in. It is strictly for commercial real estate purposes and business purposes. This is not for, I just want to be clear, this is not for the developer or the real estate investor who's looking to purchase multifamilies and rent them out. It really is an owner-occupied real estate product. It's a powerful product in that we're able to lend up to 95% of the property's value with a maximum loan amount of $5 million. This too is on a 5-year term. However, the amortization is based on a 25 years. And so you would be, paying principal interest as though it was a 25-year loan. But then at the end of 5 years, we'd be looking to either do a refinance or, perhaps you've done well enough to sell the business or sell the property. But whatever it may be, that at that time, at the end of 5 years, there would be a time for an exit strategy of some sort. We also provide refinance debt for an existing building. You may own a property already, and you may be looking to refinance it as well. There again, we're able to support you with up to 90% loan to value, and here the credit score would be requirement would be at 650 as well here. Additionally, as a small business owner, one of the differences, you may have heard of the Small Business Administration's 504 program, which is similar, but they have a higher point of entry in terms of the down payment with 10%. And then also they have a higher occupancy rating at 51%. With True Fund, our minimum requirement is 25%. So we designed it this way to be more attentive to the types of properties that we're encountering in the New York area in particular. Okay, so I think we'll talk a little bit about our lending process. And basically, across all of our loans, we would require a pre-screening or pre-lending review. Every loan opportunity is initiated with an online inquiry form that we would send the link out to you. You would fill that out. It's probably all of 5-10 minutes. And that will give us some preliminary information in order to determine if we could move forward with a formal loan application. Once we complete that review, we would be in a position to issue out a letter of interest. It would detail your fees, closing costs, the term of the loan, and what the monthly payments would look like. And if that's all acceptable to you, you would then, execute that document, and then we're now in a position for you to submit a full loan package, which then would go into underwriting. Our underwriters typically take between 3 to 5 days to come back with their analysis and their recommendations. And then we forward it on to decisioning with our chief credit officer. And if all goes well there and everything's approved, we then would be moving towards closing and a disbursement of funds. You may be asking, how long does this process take? Well, if the stars are all aligned and, we will move as quickly as you move. But typically, I would say, with the exception of the real estate loans, because those we have to wait on third-party reports, et cetera, such as appraisals or environmentals. However, we would be, I'm sorry, I lost my train of thought. We'd be looking to close within a 3 to 4 week time frame. Again, that's if the stars are all aligned. In the case of commercial real estate, we'd be looking at realistically more like 2 months, a 45 to 60 day time window. But that again is moving quickly, getting all the documents in place. And that's another thing I think that we can assist with. But, it's very important that as a small business owner that you maintain really, really good records. Employ the services of a CPA. We know that you want to be more focused on the business at hand. So as you can see here, these are some of the types of documents that we require. We require 2 years of personal and business tax returns, year-to-date profit and loss statement. That would be from January until through now. Your corporate documentation, entity formations, and be in an active state with the Secretary of State. That's all very important as well. We like to receive an executive summary of the business and the need that why you're seeking the funds. It's not always necessary, but we like to see it because it definitely gives us and gives you a stronger candidacy for a loan. We do ask for a debt schedule. All of our loans are going to account for any existing debt that you may be servicing. This is across both personal and business accounts. We do ask also for a personal financial statement. That would be that would come through our application process. It's on our secure portal that we use to secure that information. Each owner with more than 20% ownership would also be required to provide personal tax returns, a personal financial statement, and we would also run their credit report as well. And then again, if you're looking at commercial real estate, we would need additionally a breakdown of the property's expenses, things from like utilities, insurance, maintenance fees on the building, and certainly the income. If it's a mixed use type property, we also would want to see that any current leases and get an understanding of the income that the building is generating as well. We would include 75% of that property income into the income stack as we look for debt service coverage to support the loan. So what are some of the issues, challenges that we do see? Again, as been discussed already, there's, many small businesses find limited access to capital. And that's because many of the traditional funding sources may have stricter guidelines. Low credit scores. That's another impediment, again, with traditional banks. Maybe there's inconsistent cash flow. Your business may be seasonal. Maybe you're an event planner and, the bulk of your income comes during wedding seasons or graduations, right? Maybe you're a manufacturer where you don't ramp up production until later in the fall or in the winter. That's also an issue that we find as well can make it difficult to meet debt obligations. The other issue is the documentation. We find sometimes our borrowers are just not document ready. They have not consulted a CPA or a really strong bookkeeper to provide these documents in a timely manner. Again, across all of these situations, a no today from us does not mean that we can't get to a yes tomorrow. So again, we would be supportive of your business. We would point out any issues that we're seeing, and then do our best to work with you through some of our partners with how you can overcome some of those challenges and become more loan ready. And so with that, I'm going to turn it back over to Veronica. I hope I was helpful. If there are any questions, certainly we can get to those later on in the discussion.
Thank you. Thank you, Jepta. As a CDFI, we aim to really break those barriers that exist, but even oftentimes, as much as we are flexible in lending with some of the products that we have created, such as the contract mobilization, where if you go into a bank today with an amazing contract, but you've never performed on it, oftentimes they can't leverage it as the ability to repay. So we created the contract mobilization. Or maybe you're interested in purchasing your first commercial real estate product, but maybe you don't have the down payment requirement needed, or maybe even after having the down payment requirement, your reserves look a little low, so it makes you like a weaker borrower. We've created the real estate acquisition product that drops that occupancy rate from the traditional 51% or 100% down to 20%. We also dropped the down payments requirement. And so, although as a CDFI, we aim to create those products, the challenges we often see are the ones that are across the board. So today, we wanted to make sure that you have information that you can use to become application ready, whether you're trying to get financing through a non-traditional lender like a True Fund or a traditional lender like a bank. The goal of today is to make sure that you have the information needed to really get you successful. And so I wanted to have these tools for you to understand what can you do today. If you started with your business plan and maybe if you're now in business year 5, I guarantee you that that business plan could be different. You know, that business plan is a living, a document, a breathing document, and it's critical to have that document updated, and that you can refer to it, look at it, see what changes, that you maybe started with an idea, but now that you're in year 5, you know, you've changed your maybe value proposition, or you've improved it or whatnot. So, you know, making sure that that clearly defined plan really just gives a lender a good picture of your business plan, your goals, your objectives, those kind of things. Okay. Understanding your personal financial health. I talked about understanding your personal credit, as it's going to play a major role in your financing. Again, the way that CDFI looks at credit is very different than the way that the bank looks at credit, but it's important for you to know where your credit is at and what are the steps you need to improve them if you have to. Again, the credit score tells a story, and it's important for you to know that even if you had challenges in the past, that you have the story to tell in it, right? And ensure that you have those keen financial documents ready is going to be key. So, you know, having your documents, I'd love to say, stay ready so you don't have to get ready. So you should have like a folder where it has, you know, your tax returns. It should have a year-to-date cash profit and loss statement. If you're wanting to expand, it should include projections, right? Those kind of things. It's important that you have all your documents in order, because typically what we see in common challenges is that we just don't have the documents ready to get the process moving quickly. So having that ready is important. Demonstrating the ability to repay, so adequate cash flow, and that's going to differ too from bank to CDFI. So a CDFI may say, well, we only need a 1.10. So what does this mean in normal terms? We need $1.10 that you're making for every dollar that you have borrowed or want to borrow. A bank may require you to have a minimum of 1.25, meaning that your company should be making $1.25 for every $1 you've borrowed or are going to borrow. A real key piece here too is when you're understanding those cash flow and how does the business have the ability to pay back, is really understanding, are you even taking a payment, pay from your business, or are you running the business profits down to your personal? So if you're doing that, can my business support not only the business, but can it support your personal debt as well? So that's a very key factor, if you're not taking a pay from the business. And again, something really important that you need to be asking your CPA to see, why aren't you taking a pay? If you're working in the business, can you set up the structure where you're taking a pay so that pay can offset that personal debt that you may have as well. Know your collateral or equity that you're injecting in the deal. And so, there are some banks that are going to require you to have collateral, to pledge some sort of collateral. And there are some CDFIs that may not necessarily look at collateral, or may look at other types of collateral. So, again, it's our job to know what as business service organizations, or even on the part that we do where we're advising clients. But it's important when you're going there to know, okay, well, what do you have to offer if you have to pledge some sort of collateral? And that's going to vary based on the loan request and type. Understanding the role of the 5 C's of credit is really important. It's going to put you in a better position to dialogue with your bank. And so those 5 C's are character, capital, capacity, collateral, and conditions. Jepta kind of touched on that, but at a CDFI like TrueFund, we have an extra C that we like to put in there, and it's community. And sometimes it's what is your business doing to support the community as a whole. So like Tatiana was saying at the beginning, you guys are job makers. So it could possibly mean that you're creating jobs that nobody else is creating. So this is really key in being able to explain why, should we fund your business kind of thing, or why should an investor invest in you? And so little small story again, I love stories, but we helped a business owner who was taking over his grandfather's small business. It was a restaurant in a very a community that didn't have, they were kind of known as a food desert per se. And they've always only served plates that were no more than $8 a plate. I mean, you guys can't get a hot plate you can't even go to McDonald's today and get an $8 meal, to be honest with you. So it's really important to keep them in business because they're doing that for the community they serve. So again, that extra C is really important for CDFIs that are mission driven, mission lenders, is knowing like, what do you do for your community that you serve? What makes you unique kind of thing. But knowing the 5 C's are important, knowing what your credit score is saying. If you've had late pays in the past, being able to talk through that, those kind of things. And, again, preparing a complete loan package, it's really difficult as a lender, to have that pre-lending conversation that we talked about. And this is any lender. And then they may require you to provide, tax returns, maybe projections, whatever the case may be, a balance statement. And, you're kind of getting that information in pieces. And so this is why I say it's important to have that information together. So it's even great for you to be kind of looking to see, what is my cash flow telling me? Do I need to raise my prices? We were working with a baker where, the cost of eggs for a little while went extraordinarily expensive, and so when we looked at her profit and loss, clearly we could see that her supplies had gone up again. So, just being able to speak through that is great for you to know what your numbers are telling you. Maybe you're a seasonal business. And so when you're providing profit and loss statements, mid-year, and maybe mid-years when you slow down the most because, it's cold where you live or whatnot. We see that a lot in like landscaping businesses that may slow down for a certain period of time. So being able to explain that, because, the numbers only tell us a story, but you color the picture. And prepare to be interviewed. Your banker is your advocate, right? Your lender is your advocate. They are wanting to get you to a yes. So they're going to ask you questions that are not going to be on the application. They're going to clarify information that's inconsistent, and they're going to want to work with you. So, for you to be as transparent as you can be, because their job is to color that picture to the underwriter when the underwriter comes back. And just kind of going back to this little screenshot here, I always like to say, when we're talking in the pre-lending review and discussing loan products and programs, and you submit the loan packet, you've done your job, right? When the lender works in submitting your loan package, they're working with the underwriter. They're coloring that picture. They're answering questions. Sometimes they have to go back to you and say, hey, your numbers are saying this, or the underwriter is wanting to say this. or asking this, can you help me with it? There should be no surprises in this period because you've discussed it, you've disclosed it all. But you know, the underwriter's job is to protect the lender. The lender's job is to protect you and advocate for you. So again, you know, when you're having that pre-lending interview, it's really important for you to be transparent with what your goals are. You know, if you've applied at other lenders, all of that. So just be prepared to you know, be interviewed. So questions your banker may ask you is how will your business repay the loan? So that's the number one question, you know, that all lenders want to know is how are you going to repay this loan? Can you cash flow it? Are you cash flowing more than the debt payments? You know, how will you repay the loan if the business fails? Is the collateral sufficient to repay the loan? How does your business collect its bills? You know, so like I was saying in your numbers, sometimes your numbers doesn't show that you have accounts receivable. So being able to talk through that, you know, is important. How does your business pay its bills? How do you control your inventory? How do you control your expenses? You know, are you committed to your business? You may have a W-2 wage earning job on the side, which is fine, but they're wanting to know, are you committed to your business or your business is just a side job or side company? You know, what is your business plan for succession? Do you have a profitable operating history? Are your sales growing, shrinking? Are your profits increasing? You know, how do you pay yourself? You know, what's the future of your industry? You know, who is your competition? Those kind of things. But most importantly, I wanted to stop and say, you have to have questions for your banker. You know, I want you to make sure that you're asking your banker before they even take an application from you. Is understanding the bank's appetite. Sometimes it's not you, but the conditions of the environment we're in. So it may be that that loan or that bank may have too many restaurants, and so they don't want to fund any more restaurants. Okay. You know, it may be that they're construction heavy and they've had a lot of losses in their construction portfolio. So again, asking your banker what factors do they consider when reviewing the loan application is key. What's the most important factor? I mean, it could be that you have a really great relationship at that bank and they can use that as a mitigating factor. You know, like I said, at a True Fund, we're very mission oriented. So that community piece is important to us. We also are one where, you know, we want to make sure that that the cash flow, that you can support the loan payments and that it could support, you know, even on the personal side as well. Credit is not that important here at True Fund, but it may be very important at your bank. So you want to know what that looks like. You know, you want to know, are they able to grow with your company as your company's needs evolve? How can they help you manage your cash flow? You know, can they help? How do they even interact with you and your business once the loan is closed? And so, you know, closing the loan is just the one piece, but you want to make sure that your lender and your banker are there for your business as you're growing. Questions specific to the loan request. Again, you know, I want you to have this for you is like, what is my interest rate? Is it fixed? Is it variable? Are there any penalties if I want to pay this loan off sooner? What is the cost to close the loan? Are there any financial covenants associated with the loan? Are there types of insurance policies required? These are just a few questions that I put there for you, but those are really important to know. You know, is it a monthly payment? Is it a fixed payment? I've seen so many business owners that have taken on debt and they have weekly payments, and it's such a strain on their business. And so again, I want you to have this takeaway. Fast money isn't always good money, but I want you to make sure that you're asking the right questions before just taking on any debt, right? And, you know, last but not least, like I said, this information, we wanted to make sure that you had, that doesn't matter what capital source you're going with, it's really important, again, for you to be prepared. And strong businesses want to do businesses with strong business. So, as you're building your business credit and you want to do, B2B, business to business, trade lines, those kind of things, that's really important. So I want you to stay ready so you don't have to get ready. And when you're thinking on taking on debt capital, really think to yourself, how is this money going to help me make more money? But here at TrueFund, we're here to support you. We do pre and post loan business advisory. We have the future of TA coming, of future technical assistance. So we're going to be doing a webinar in about 2 weeks to talk about our new technical assistance program that we have, which we're going to be integrating AI. I know a lot of people can get scared of AI, but we're integrating it into the number one thing we see in our businesses is that cash flow piece, which is, business owners are not able to cash flow the current debt that they have or even get the new debt they want to get. They're showing losses or maybe very little profit. There's not enough add backs that we can do. And so the future of RTA or technical assistance is to give you this ability to upload your financial documents, and the AI has the ability to read the numbers and help you make strategic decisions as you choose to grow your business. So we really appreciate your time. We appreciate Miss Dora and Lisette and the New York, New Jersey MSDC team. Strong partnerships are really what makes this work go round. It's staggering that as business owners apply for lending, the number one place they apply for lending is their bank, and it should be that way. But CDFIs were created to help fill that gap. But only 6% of clients are actually applying at a CDFI like TrueFund. And part of it is because they never heard that that is an option. The second place business owners are going to apply for a loan is actually at a online lender, right? And so we want to stop you from applying at an online lender because we know costs are high. And so we don't want those that to be your only option. So we wanted to make sure that today we talked a little bit about who TrueFund is and how we can support you, and that this information is just not for TrueFund. We may look at it differently, the numbers, than maybe a traditional source does, but we're here to support your business growth. So I'm going to open it up for questions to see what burning questions you have today. I want to make sure that we answered it. We dropped a lot of information in the chat as we spoke. And so we want to make sure we're answering any questions. So what questions do we have?
We don't have any currently.
Okay. And I see some names I recognize. So hi, Miss Caroline. All right. Well, if y'all don't have any questions, I'm gonna turn it back over to Lisette and Dora.
Thank you so much, Veronica and Jephthah and Tatiana. Thank you so much. That was really wonderful, great information. I hope that all those on the call will take heed and reach out to us or yourselves directly. Thank you for all the information you put in the chat. For all of you on the call, please take a look at that. There's also a barcode there for further information. And you can always email us if you have any questions. But thank you guys. You guys were amazing as always, and we appreciate your partnership. We truly do.
Absolutely.
So thank you so much, guys.
And I just wanted to say, if you guys have anything, I know this was a real kind of big overview of the accessing or the power of capital, but if you all want to go over something specific, we're available for one-to-ones. But more importantly, just share it with Lisette and the team if you guys want a specific topic, if you want to go through like debt service coverage ratios or anything more specific, we can do that too.
Wonderful. Veronica, thank you guys. Thank you so much. And please, for all those on the call, please take heed of this information and reach out to us. I think Ruben has.
Well, we appreciate that,
Yeah, Evan's
Ruben.
typing.
Thank you.
Absolutely. Well, thank you. I appreciate everyone's time. We'll be seeing you all, and don't get too cold on us now.
Listen, I've got my hat right here. Okay, it's getting there. You guys be
Okay.
well, and thank you so much. Thank
right.
you again.
Thank
right.
you.
So,
Take care.
see ya.
Bye.
Take care.
Bye.
Bye.
Bye.